Welcome to the Q2 2026 earnings call for Regency Petroleum Company Limited. Now, this quarter ended June 30th, 2026, and it was a major quarter for the RPL family and team. So, the leaders, the CEO, Andrew Williams, and Executive VP, Amanda Williams, are here today to run this earnings call, host this call to speak with you, their shareholders and potential shareholders, to talk more about the context around the numbers, to help you understand what the business has done and where the business is going, and why you, the shareholders, should stay invested in RPL. I am Renee McDonald, the CEO and Investor Relations Lead at LearnGrow Invest, and it is my pleasure to be the moderator for this call. At this time, I'd like to welcome Andrew Williams, the CEO of RPL, to the platform to host. Hi, Andrew.
Hi, everyone. Good afternoon. It's good to be here again once more on this platform. And thanks to Renee and the team for facilitating this process. All right, so we'll
Always a
start
pleasure.
with a word of prayer. Let us pray. Heavenly Father, as we come to you now, we thank you for this opportunity once more, Father, to discuss with our shareholders and enlighten them as to where we are, what we're doing with this company, oh Father. We put you first in all that we do, and we thank you for all your blessings and mercies upon this company and upon each and every one of us, oh Father. We ask that you continue to guide us in our decision-making processes as we continue to put you first in all that we do. In Jesus' name we pray. Amen. Okay, so welcome again, everyone, to our Q2 2026 earnings call. Now, we have accomplished a lot since we last spoke. We were on this platform, and I'm pleased to be here today to engage with you and to answer any questions you may have with how we're moving forward with the company. All right, so first of all, our truck stop, long awaited, began operations a few weeks ago, and we started selling our petroleum products or automotive fuels. The convenience store and the truck stop is still under construction, but we have begun our operations, our gas sales, and we are happy to have that in operation. You know, it is highly anticipated by the community and each and every one within the RPL group. We also started our project in Kingston, our second project in Kingston, by the airport, NMIA. So we started our land clearing. An announcement was made recently that we will be the marketing company for that gas station. And we started our land clearing, and the construction process has begun. We anticipate a 24-month construction period. But, you know, as we go along, we'll keep you updated with that. And also our complementary diversification, our QPR, we have had some delays, but we'll go further into that after. But everything is still on track for the QPR to be in Jamaica. And we look forward to having the general population is anticipated and looking forward to have experience, to experience this pothole repair product that we have introduced on the market here in Jamaica. So in moving forward, we have our locations, our current locations, Savlamar, company operated. We have Negril, dealer-owned, company operated. We have Paradise, company-owned, company operated. Spanish Town Road, the Wigan Group in Crawford, dealer-owned, dealer operated. And we have coming on stream within the next year, 24 months, 2 years, Norman Manley International Airport Service Station. So we will now hand over to our Executive Vice President, Amanda, to go through the financial highlights with you.
All right, thank you. Good afternoon, everyone. I'll now take you through the financial highlights for Regency Petroleum Limited for the second quarter of 2026. I'll begin with an overview of our key financial results, followed by our statement of comprehensive income, statement of financial position, and finally, our cash flow highlights. Starting with the highlights, um, operating revenue for quarter two 2026 was 894.95 million compared with 430.35 million in quarter two 2025. This represents an increase of 108% year over year. Moving to the gross profit was 145.47 million compared with 91.68 million in quarter two 2025, representing an increase of 59%. Operating profit was 77.39 million, up 69% from 45.87 million in quarter two 2025. Our net profit was 53.86 million compared with 36.03 million in the corresponding quarter of 2025 as well, representing an increase of 50%. The total expenses for the quarter were 68.09 million compared with 46.12 million in quarter two of 2025, which showed an increase of 48%. So moving to the earnings per share, earnings per share increased to 3.8 cents compared with 2.5 cents in quarter two 2025. And finally, RPL's share price as at June 30, 2026 was 4.61 compared with the 4.06 year over year, representing an increase of 13.5%. Overall, the highlights show increases across revenue, gross profit, operating profit, net profit, earnings per share, and the company's share price when compared with the corresponding period. Now on to the financial summary. So looking more closely at our statement of comprehensive income for the 3 months which ended in June 30th, 2026, we can see the year-over-year comparison between quarter two 2026 and quarter two 2025. Operating revenue increased from 430,345,996 in quarter two 2025 to 894,950,319 in quarter two 2026, which represents an increase of 108%. The gross profit increased from 91,680,817 to 145,465,939, which represents an increase of 59%. The profit before finance costs increased from 45,867,733 in quarter two of 2025 to 77,386,436 in quarter two 2026, an increase of 69%. The profit after taxation increased from 36,025,300 to 53,858,998, representing an increase of 50%. Profit being total comprehensive income increased from 35,519,938 to 53,858,998, representing an increase of 52%. So lots of numbers. And finally, earnings per share increased from $0.025 in quarter two of 2025 to $0.038 in quarter two 2026, which also represents an increase of 52%. Now moving on to the statement of comprehensive income chart. So this chart gives us a visual comparison of our or quarter two 2026 and quarter two 2025 results. The most significant difference can be seen in operating revenue, which increased from approximately $430.35 million to $894.95 million. We can also see the increase in gross profit from approximately $91.68 million to $145.47 million. Profit before finance costs increased from approximately $45.87 million to $77.39 million, and the profit after taxation from approximately $36.03 million to $53.86 million. So across each of the financial measures presented on this chart, quarter two 2026 recorded higher results than quarter two 2025. So on to the statement of financial position. As of June 30, 2026, I'll begin with our assets. Cash and cash equivalents stood at $13,235,006, compared with the $27,835,493 in quarter two 2025. As presented, this represents a 110% decrease. Property, plant, and equipment stood at $791,408,220, compared with $490,009,881 in quarter two 2025, which represents an increase of 38%. The accounts receivable stood at $268,717,491, compared with $106,100,670 in quarter two 2025, representing an increase of 61%. And moving to the liabilities, the current portion of long-term borrowings was $56,143,884, compared with $224,508,760 in quarter two 2025, which represents a 75% decrease. And the payables stood at $173,353,225, compared with $78,819,645 in quarter two 2025, which represents an increase of 120%. Moving to the statement of financial position. This chart provides a visual comparison of those figures between quarter two 2026 and quarter two 2025. We can see the difference in cash and cash equivalents, which stood approximately at $13.24 million in quarter two 2026, compared with $27.84 million in quarter two 2025. Property, plant, and equipment stood at approximately $791.41 million, compared with the $490.01 million. Accounts receivable stood at approximately $268.72 million, compared with $106.10 million. For the current portion of long-term borrowings, the figure stood at approximately $56.14 million, compared with $224.51 million. And finally, payables stood at approximately $173.35 million in quarter two 2026, compared with the $78.82 million in quarter two 2025. The chart therefore allows us to clearly see the movements between the two periods across major items presented in our statement of financial position. So moving to the statement of cash flow. Cash flow from operations was negative $17,700,513, compared with positive $21,136,268 in quarter two 2025. As presented, this represents a change of negative 184%. Cash used by investing activities was negative 455,977,999 compared with negative 138,074,179 in quarter two 2025, which represents a change of negative 230%. And finally, the cash provided by financing activities was $452,912,335 compared with $132,013,625 in quarter two 2025. This represents an increase of 243%. So moving to the cash flow chart or financial chart provides a visual comparison of these cash flow figures. For cash flow from operations, quarter two 2026 recorded negative 17.7 million compared with positive 21.14 million in quarter two 2025. For cash used by investing activities, quarter two 2026 recorded negative 455.98 million compared with negative 138.07 million in quarter two 2025. And for cash provided by financing activities, quarter two 2026 recorded approximately 452.91 million compared with 132.01 million in quarter two 2025. These figures complete or comparison of RPL's financial performance and financial position for quarter two 2026 against quarter two 2025. To summarize the financial highlights for the quarter, operating revenue was 894.95 million, gross profit was 145.47 million, operating profit was 77.39 million, and net profit was 53.86 million. Earnings per share stood at $0.038, while RPL share price as at June 30, 2026 was $4.61. So that concludes the financial highlights for the second quarter of 2026. I'll now hand things over back to Andrew, who will take us through the company's outlook. Thank you.
Thank you, Amanda. Excellent as usual. All right. So, with regards to our company's outlook, we, as everyone know, we have acquired Yardman LPG business, and we have shown a significant increase in our revenues and profits due to this acquisition. So we are quite pleased so far with the decision to do so, and we look forward to continued increases and expansions in the LPG division. With regards to our growth pattern, well, we are now seeing a significant growth in the LPG division over compared to the previous year. And as I stated before, we had intended to lend some more focus or priority on the growth of our LPG division, which we have now seen. With regards to automotive fuels, we gradually grow as opportunities come on the table. We had some plans which we are now seeing come to fruition, with namely our Crawford truck stop and gas station, and also our Norman Manley International Airport construction for our gas station, our service station there, which was recently announced. Now, as we move forward, we just want to see these two new service stations come. Well, one we have seen recently come to fruition, and we're looking forward to Kingston. And we also have some other opportunities on the table, as we always do. And we are looking through, we are doing our due diligence on these, and we will announce in the future what decisions we plan or we make or we have made in regards to expansion for our automotive fuels, our gas stations. So looking forward, in our company's outlook, we're just trying to experience whatever we have now on the table, be master it, and then we look at the opportunities on the table, and make prudent decisions. As always, we put God in front of our decision making processes and everything that we do. So we are here looking forward to see the continued growth of Regency Petroleum. And we thank our shareholders once more for the confidence they have displayed in the company. We can see the effects of it in our share price. And as we grow together, a Jamaican-owned company, we want to see our Jamaican companies grow. We embrace other Jamaican companies also, and we are willing to partner with any company that wishes to partner with Regency Petroleum to aid in the general growth and development of the country and the country's businesses. So we can probably move forward now to our question and answers.
Awesome. Yes, we can. Thank you so much for that, Andrew and Amanda. I will welcome you both back to the platform should there be questions for you both, which I see Limitless has a few in the chat already. And I'd just like to take the opportunity to invite our other viewers or audience members to add your questions in the chat. And I also have a few for you, Andrew. So we will be having a good, healthy session as usual. And we appreciate the transparency and the time that you're taking to share with your shareholders in this way. So the first one from Limitless says, before Sav closed, before that location closed, what percent of RPL's revenue and gross profit came from it, and when will it reopen?
Okay, so the Sav location, after the opening of our Paradise location and Negri location, the Sav location, as stated before, was more of a sentimental location in regards to, because that's where we started out. But with the opening of our Paradise location and Negri location, it had not made up any significant part of our revenues or profitability just before our months leading to the closure of the Sav location. And just to state that Paradise, for the most part, has taken up that, has acquired that the difference. We are seeing the differences being acquired by Paradise, and even increased volumes being done.
All right, thank you for that. The next question from Limitless as well says, when will QPR production begin, and what annual revenue do you expect once it is fully operational?
Okay, so the projections for the QPR, I'll answer the question from back to front. So, all right, so for the QPR, all right, let me start from the beginning. For the QPR, we have had, since our launch, we have had this overwhelming demand for QPR, far exceeded our projections. First of all, that's the demand for it. So initially, we had stated that we'll have a smaller setup in terms of infrastructure for the QPR product, but based on that launch and the demand from all over, from agencies, from housing associations, from charity groups, everyone, we have come to realize that, and even after discussion with our partners in the US, the QPR, the head office, the head group, we have come to realize that this small infrastructure that we originally planned would not be sufficient, and we didn't want to start. It's better we have a little delay in our starting than to start and probably have to stop or are not able to supply the demand on the market. It's a new venture for us. We're trying to be cautious. I mean, it's a complementary diversification, as I name it, because it's not fully within our line of what we do, our industry. So it's a little bit a diversification. It's complementary because the byproducts, the raw materials are made up of what we sell, which is diesel oil and bitumen. So with all of this being considered, we have decided that we'll have to go further with our capital investment into QPR to have a more sustainable and substantial infrastructure in place for equipment wise to do manufacturing. Because I just reminded that we're going to be manufacturing this product in Jamaica. So that's for the delay so far, and we are far ahead in our acquisitions now of the new equipment, which will take some time because it's partly customizable. So we have been busy with that from the launch until from we decided that we have to go with the bigger equipment. So we have a little delay on that, but it's for the betterment of the company and for everyone. We don't want to launch this product and not able to supply the entire demand, especially that overwhelming demand that we're experiencing. No, so that's where we are with that. Now, for the projections in terms of profitability, we have had done a number of cash flow projections. It is we try to be conservative with it. I can't state much of it now, but it looks boy, I don't know the word to use, but it's giving
I
us
think your
an
smile is telling us a
incentive
lot, though.
to continue with it. It's a huge incentive to continue, which we're doing all the analysis, our CFO and our accounting team, everyone, the board, we're just doing a lot of due diligence, analysis on the projections, the cash flow projections and the profitability, the increase that we expect in revenues and profits, as the margins would have been different compared to what we are in now. So I don't want to state much on it, but yes, what I can say for sure, it will increase our profitability and our revenues. And it's based on what we are seeing in our cash flow projections, it's worth the while. It's very feasible for us to take advantage of this opportunity.
All right. Thank you for that, Andrew. And we are indeed very much looking forward to QPR launching. I know that the market is ready for it. The Caribbean is ready for it. When we did the recap of the launch event, there were so many queries just under that one recap video. So I know that there is much demand, and we look forward to seeing it come to fruition as well. Um, as we talk about investments, though, you would have mentioned the Yardman acquisition, and with that came some debt, and we saw the effects of that in the cash flow highlights just now. Can you share with the audience, with the shareholders, a little bit more about that? Because in the report, it would have stated that there's a monthly amount that you are paying over to Yardman now, that there was some refinancing done through CIBC, etc. So can you share a little bit more about that for the understanding of the wider audience?
Okay, well, for Yaman acquisition, we were in negotiations. We struck a deal on it, quite favorable to both parties, and it's quite manageable. What the agreements that we have in place is quite manageable for the current operations up from where we took it over, and our market share significantly, and our operations are quite efficient. So in terms of finance, I'm just saying that just to say this, that our financing arrangements, we took out some debt, and we're also financing some existing debt that Yalma would have had. So and we are quite comfortable. So all this was done during the decision making process as to the acquisition. We have been operating since February, the end of February this year, going into March, and we are quite comfortable with the operations, with whatever debt we took on, and whatever with CIBC, and whatever we acquired from Yardman under Yardman. The operations alone is within itself is comfortable in servicing these debts.
Okay, thank you. So you're not putting any additional strain on the business, is what you're saying. It already it covers itself.
Yeah.
Okay, awesome. Thank you. The next question from Limitless is, what opportunities are you pursuing in Western Jamaica, and are any already being negotiated or bid on?
In Western Jamaica, we are looking to continue our expansion in the automotive field and also the LPG. So yes, there is a major opportunity on the table right now with regards to expansion on both segments. On both segments, for LPG, especially on the bulk side, uh, we do not have that great market share in this region, or even in Jamaica in general. But since we are primarily located in Westmoreland, the western side of Jamaica, we plan to make some steps now based on what is on the table to increase our bulk market share. So that's in the short to medium term. And as for the service stations, we continue to operate and continue to seek out any viable opportunities for expansion within this region.
All right, that is good to know. But as we talk about Western Jamaica, there was mention again in your Q2 report about Hurricane Melissa and the recovery from that. The fact that like the insurance payouts have not yet come, but you are still trying to rebuild. What is the status now on the repairs and the work that you have to do?
Boy, since the hurricane, we in the western side, especially in Westmoreland, we have numerous challenges in terms of, well, let me speak to the insurance first of all. It's still not finalized as yet. That is one thing. But even so, in terms of having the labor or the skilled labor that you would need to carry out these works for repairs, it's a great, I cannot say it enough how great the challenge is because of the devastation that we experienced. Everyone had experienced in Westmoreland primarily. You find that there's a great labor challenge in this part. I'm not sure if you have it in the eastern side as much as there, but for Westmoreland, it's a huge challenge. We have to be bringing labor from all over the island, trying to get assistance to complete repairs. So it's a great delay there, and we are hoping that it will get better. We see a little improvement, nothing significant really. We haven't seen, we have a little improvement. We have the material. We had challenges with even gaining the materials to do the repairs. We have challenges with that. We still have challenges with that. It's a little better now, but it's still not where we want it. Nowhere near where we want it to be. And it's the same for labor. So we're still having some major challenges with that. However, we managed to bring the service stations operational to a certain point, operational. But in terms of cosmetics, especially in terms of cosmetics, there's a great challenge there.
Okay, understood. And I think as a country, as we continue to recover, we can understand that there is need for that work. When I visited in June, when I went that I didn't even go as far as Westmoreland this time. I was in Montego Bay, and you could see the effects. You could see the continued impact of it. So we continue to pray for recovery for everybody because, of course, as you mentioned, it impacted across. People are impacted across the board. So the laborers who would usually be there, they were impacted, and they probably have to find other sources of income, and that may be impacting why you're not able to get them as readily now. So we continue to pray for a full recovery for the entire region as we continue to grow together. The next question from Limitless has to do with Crawford and what revenue do you expect to earn from supplying it, and how has it performed so far?
So far, Crawford has been doing very well so far. And I mean, it's not a surprise because the location is it's an excellent location. It's located on the main thoroughfare from east to west. It's on the main thoroughfare, and so far it has been doing, and in some cases exceeding some of what has been targeted for the various products that we sell there. In terms of revenue, yes, we expect to do huge volumes at the Crawford location, considering that it's a proposed truck stop, the first formal truck stop in Jamaica. So as soon as we have Crawford completed in all aspects, convenience store, truck stop facilities, we are expecting to see huge volumes being done at Crawford, because you're talking about trucks, trailers that within itself would consume huge volumes for each unit, as opposed to a motor car or motor
Mhm.
cars. So we are anticipating huge volumes, and hence huge revenues and profits from the huge volumes. So it's a dealer owned, dealer operated. So the margins will be a little bit smaller for the company. But however, we plan to make up for that with the volumes. And that's what we forecasted even prior to the construction process, that we should do a lot of volumes there, which is one of the reasons also why we have it as a truck stop, to gain that haulage, that logistics market for the trailers and the trucks, the heavy equipment that for the development within the area. All those, we have industries close by, limestone quarries that have a lot of heavy equipment, heavy duty trucks that are heavy users of, in particular, automotive diesel. So we expect high volumes from that service station, along with the motoring traffic, over 12,000 vehicles per day, based on the statistics. So we expecting huge volumes there.
All right. So that is always good to know, and you have always said that that is one of the major considerations about the truck stop and Crawford. So I'm happy to hear that it is going well. Limitless is asking how much more capital is needed for NMIA, and how do you plan to fund it given the current cash position?
Okay, so we are in negotiations now with, it's going to be a franchise gas station. So we acknowledge that each service station is heavy in capital expenditure, and we are aware of the financial position of the company now, and the growth position where we are. So we are trying to balance out that capital expenditure along with growth of the company, expanding into service stations. So our strategies have been tweaked a bit from where we started out. Prior to now, we used to do a lot of capital expenditure in our projects, in our service stations, whatever expansions. Now we have tweaked it a bit so we can have a balancing act where the capital expenditure and the growth can be balanced out
Mhm.
for the company's continued growth financially and cash flow wise. So with regards to NMIA, we have strategies in place to offset the capital expenditure there that will not burden our cash flow position.
Right. So the natural next question that comes from this, or comes on the tail end of this, is how much consideration, if any, is being given to going back to the market, because you do have some more space on the junior market to go back to shareholders or go back to the public to get additional funding there. And it is an option. It's an option that some of your shareholders have certainly advocated for. Is there consideration being given to going back to the market to utilize the rest of that space that you now have on the junior market, especially considering that you're coming to the tail end of that 5-year tax break period?
I don't know if we are different from the traditional companies around, but uh, for Regency Petroleum, we are aware of what is on the table and what we have access to via the market. We are aware that we are coming close to the 5-year period where we'll have to start paying over 50% taxes on income taxes.
Right.
But we also are a company that whatever investment or whatever we take our funds or equity or debt, whatever it is, we are always clear in what we want to do with it. And we always try to execute what we say we want to do with it. So I'm saying that to say that we have some projects on the table, yes, but we are not at a position where we're going to just access the market for funds that is there because it's there. We will have to have an agreed, feasible, profitable project or means of which we will take these funds to to allow the company to grow financially. So for whatever reason we'll come back to the market for, we it will be for growth for the company, not for just taking it because it's available and we'll find something to do with it. No, we have a number of opportunities on the table. Our board, our accounting team, our financial team, we meet continuously to look at these opportunities and to ensure we make the right decision as to which opportunity or opportunities we'll move forward to. Then we will decide which avenue we will move forward in terms of financing. And we will always try to ensure that we make prudent decisions as to whenever we take on debt or equity. So it is something in the best interest of the company, whether it's for expansion purposes, we have some debt now, whether it's better off to pay down some debt or whatever it is. So it is not, it's a decision that we look into very carefully before we decide whether we are going to for additional financing and what it will be used for. And we have to ensure that whatever we say it is going to be used for, it is used for that purpose primarily and not for anything else. So it's a situation where whenever we decide to announce we are doing a raise or we're doing debt, we already are very clear as to what the purpose for this funding will be for, and we move and execute exactly for what we stated this for.
Perfect. So Angela is cutting right to the chase. Angela just wants to know how to buy some shares in this company. That's what she wants to know.
Well, I think probably you can answer it better.
Yes,
Based on
I surely can. I
so,
can take that one for you. That's not a problem. So for anyone listening who is interested in purchasing shares in RPL is listed on the Jamaica Stock Exchange, and you can access that at jamstockx.com. Now, with that, you do need a local brokerage account, meaning a Jamaican brokerage account. And on jamstockx.com, you will see the list of approved brokerages. You can approach any of those brokerage houses, establish your account, and you will be able to purchase shares as soon as your account is funded. And you may be able to purchase directly from the JTrader Pro, that's the Jamaica Stock Exchange's platform, or through your broker. No. uh, yes, I'm happy to jump in there, happy to help, and that
thank you
is
for that.
really what we do on the other side of Learn Grow Invest, where we teach help persons to understand how to invest for themselves. Now, there is a comment from Tavares, and he's saying, since listing, we have seen the continuous growth momentum, which continues to increase the book value. So, congrats on the record-breaking quarter for RPL.
Thank you. Thank you.
We also have an international request here. Could Regency Petroleum's energy technologies and international experience be adapted for sustainable maritime development in Macron, particularly renewable energy, coastal communities, and the blue economy? And do you see such technology partnerships as a pathway to greater economic connectivity and peace across the Indian Ocean region?
Well, it's something that we definitely could look into. Uh, Renewable energy, coastal communities, and blue economy. Well, yes, it's something that I would say, Renee, we could look into. We have some. It's funny that that comment was made, that was stated, because we actually have some opportunities on the table that we are looking at that might incorporate what is being stated here.
Wow.
I don't I cannot go any further with that right now.
Yeah, and we do understand that,
Yeah,
but I found it interesting that you're getting queries
mhm,
from across
mhm.
the ocean.
Yeah, that's good. That's good.
So I love that. I love to see that happening.
Mhm.
Limitless is asking, can RPL really handle a QPR facility build out, NMIA gas station, and expanding to more stations simultaneously.
Well, all right. So remember now, from a CEO point of view and my personal point of view, we have we always want to be a multinational first of all, but we have companies across the globe that are quite huge. So we don't discount ourselves, Regency Petroleum, as a company that can be as huge as Amazon, a Mobil, a Exxon Mobil, a Shell company worldwide. So I'm just saying that basically that we have huge plans and ambitions for Regency Petroleum Company. Now, we are a very small company. So yes, there are companies that exist in the world now that takes on multiple times, multiple times the size of Regency Petroleum what we are taking on now. However, we have to just employ the necessary personnel for these expansion processes. So what we do when we decide to do expansions, we also look at the foundation level in terms of what the requirements will be in terms of management, employing the required personnel, and also technology behind it. So what I'm saying, Limitless, is that we plan to expand to be a global company, a multinational company. So taking on QPR, NMIA is something, a challenge to the company, yes. We acknowledge where we are financially, but we know that we want to grow. We want to grow exponentially. So in doing so, there's various different processes that has to take place in terms of management primarily. So we're going to take on a QPR facility. Fine, whatever facility we are taking on our expansion that we are doing, we have to look at the cost for management to manage this division or this additional we're taking the cost to it, and whatever we are doing new must be able to handle that cost. So if we are going to QPR, it's going to require a whole team, a whole management team, labor team, staffing, employment, manufacturing. So we have to put in our projections, account in our projections for the cost for this management, these employees, and whatever, and to ensure that whatever in moving forward for the QPR, for argument's sake, it will be able, based on the projections, to sustain itself and not bleed from another segment of the company. So for the NMIA, as I said, we have to put strategies in place. We know it's heavy capital expenditure, but we have to put things in place as to how we're going to approach this capital expenditure and look at the profitability over the cash flow projection over the years to come to ensure that it will be able to be sustainable and independent within itself to sustain itself based on whatever projected profits, revenues, and profits from that segment. So yes, we are willing to take on all that we can take on as long as when we do our due diligence, which is very important. Our due diligence is very important in whichever project that we do, so that we can know it can handle in the short to medium term its own expenses and stand on its own 2 feet. So although we are one company and one industry where we are in, where we're in different industries now, but although we are one company, we also segment the different areas, and we also allow each, I wouldn't say segment, or each department or each station, each facility within itself to be independent. So in our forecast, we ensure that in the short to medium term, this additional facility, this additional business, this additional segment can be or must be sustainable and independent on its own in the short to medium term. We cannot have we cannot be expanding and that expansion over time is not able to be independent within itself to stand on its own 2 feet and can sustain itself under the one company. So if I can be more specific, you're not going to open a gas station if after, say, in the short to very medium term, it's not going to be able to stand on its own 2 feet to be profitable and to be able to pay all its bills, all its costs. It can operate on its own. So for each expansion, so for NMIA, it has to be sustainable and independent on its own, cover its own expenses, and make its own profits to contribute to the general whole of the company, that's the strategy we have been using over the past few years, where we were able to grow where we are. And we try to be prudent in our decisions. So we know that when we move forward in something, this facility or whatever we're moving forward in, based on the due diligence and the projections that we do, will be able to be independent and stand on its own 2 feet and will contribute to the revenues and profitability of the company.
All right, that's great. And the last two questions that I'm seeing here, one is from Frontline Realtor, and they're asking, are there any future oil exploration plans for RPL?
Well, we are currently in some exploration plans, but the government currently are the country is currently in exploration plans. Let's see where that takes us. And yes, definitely, if when we are at that stage, now we got into a different zone, to that zone we are talking globally. When we reach to that global stage, and we can look into that. But for now, it's being explored, the possibilities by the country. So let's see the results of that, and then see how we can partner and move forward if an opportunity arises for us to partner and move forward.
Sounds good. And the last question I'm seeing here is from Limitless, and they're asking, are the margins on QPR higher than the margins on LPG?
We have not yet experienced our sales in that. However, I can just answer based on projections that we have and demand for the product, and based on the fact that we're going to be manufacturing here now. So we have not experienced that manufacturing process as yet. However, based on our projections, yes, it is just a little over what the LPG is. The margins on the QPR. So and the QPR, I can remind you, it's a product that first in Jamaica is number one in the world pothole repair product, and we are happy to be the designate for this product in Jamaica. So I'm saying that basically to say that we don't anticipate any great competition in the short medium term, and we, because this is a product that is number one in the world, and we are the chosen ones to manufacture this product in Jamaica. So we are hope, and as we know, it is definitely each and every citizen in Jamaica, each and every person living in Jamaica, I'm sure will welcome this product, especially if it lives up to what it says it is. And we have all confidence in this product. It has proven itself. It is now number one product in the United States, and considering it's the number one product in the United States, being a first world country, we anticipate that it will be something that will do very well in Jamaica.
Thank you, Andrew. And I know that QPR has a special place for Amanda. Amanda, is there anything that you want to add on the QPR conversation before we close?
No, I think Andrew touched on everything. So
Yeah, man,
Okay.
she assisted in the negotiations a lot. I think about
Fantastic.
cover most of it. She assisted greatly in the dialogue between us and our partners in the US.
And that is awesome to know. So again, I thank you both, Andrew and Amanda, for spending the time with us to discuss your quarterly results. Q2 for 2026, it was an explosive quarter. It was a big quarter for you. And we know that RPL will continue to grow based on the trajectory that you're on and what it is that the outlook is looking like. So thank you for the time. We say thank you to our audience as well for being here and for participating. We thank you for asking the questions and being present. So if there are any other questions that you have for the RPL team, I invite you to drop those in the comments below the video, and those will be shared with the team for them to respond to you. And as you realize, they are a responsive team, so you can expect to get answers to your questions. Thank you so much for being here with us, and thank you for just one more earnings call in the books, RPL, and we look forward to seeing you next quarter.
Thank you.
Thank you.